Welcome back. It's time now to take a look at the top business stories. Proposed LSE and TMX Group deal to prove beneficial for Dubai's future. Tabreed reaches agreement on debt restructuring. And we find out about Harley-Davidson's new setup here in Dubai. The GCC markets ended mixed today, and the UAE bourses also ended in the red. The DFM was down 0.3% to close at the 1,598 mark. In the property sector, Emaar Properties lost 1.25%, and Arab Tech fell by under 1.25%. Dubai Islamic Bank gained nearly 0.5%, while Emirates NBD fell over 0.25%. DO lost 1.5%, and DP World fell 3.25%. 67 million shares were traded, valued at 89 million dirhams. And over in the capital, the ADX gained marginally by 0.1% to close at 2,710 points. In the banking sector, Abu Dhabi Commercial Bank dropped 1.5%, while Abu Dhabi Islamic Bank was up 2%. Alda Properties lost over 1%, Dana Gas fell 1.5%, and Taka rose 0.75%. Etisalat gained 1%, 54 million shares were traded, valued at 99 million dirhams. Most of the Gulf markets have ended positive today. Let's check in on those numbers now. Coming up now, let's take a look at various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. To talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Good, thank you.
There was quite a lot of mergers and acquisitions activity with stock exchanges. Only yesterday, Deutsche Börse announced it wants to take over or is in advanced talks with NYSE Euronext. Now, the activity there is picking up. What value does it add for investors if mergers, if stock market operators go together, if they merge?
Well, there's a couple different aspects of that. One are benefits for investors in publicly traded exchange companies, and those stocks have been rallying recently. And since we're now seeing very clearly a trend and everybody's jockeying for a position of what else they're going to take over in order to expand, so we could see other announcements in the near future. So those stocks could continue to see nice bullish rallies. We also have the benefit of investors.
For the traders.
What's that?
For the traders and for
exactly.
those people.
When you look at traders or active investors, they're going to have better access to international markets, so they'll have more options to take advantage of. But that will come over time, and that's going to be mostly for the very active people.
Usually there's a strong correlations with the M&A activity picking up and markets gaining momentum. Now, in the past, if you look back at maybe 2007, there was a strong merger and acquisition activity, and that's when equity markets peaked. Now that we see merger and acquisitions activity picking up, do you think we might again reach a peak with the equity markets?
Well, there's two parts of this. One is that, yes, it's possible in the near term, for not just for that reason, but for a number of other reasons as well, we may see a short-term correction or a medium-term correction very soon. But I think in the area of M&A, we're probably still in the early part of that trend. So I think we have a ways to go before we're topping.
Let's look at Europe. We had announcements this week that Nokia plans a big announcement on Friday. Something's in the pipeline. Now, the new CEO of Nokia is Stephen Elop. He was a top manager of Microsoft. What could this be all about? Tell us.
Well, some of the speculation is that there may be some special deal done with Microsoft. Some have speculated that there may be an acquisition of some sort in the works. The CEO came out with an internal memo that was very blunt recently that talked about all the difficulties and trouble that Nokia is in. So I think for sure there's a good probability that he'll at least be talking about some important internal changes and strategy changes of how they're going to bring Nokia back on top.
Or maybe the next merger and acquisition.
Maybe.
Who knows? Thanks for coming in today,
Thank
Bruce.
you.
Have a good weekend. And now to our top stories. The London Stock Exchange $3.1 billion bid for Canadian market operator TMX Group saw Bourse Dubai's stake in LSE gain 92 million dirhams in just one day. Bourse Dubai is the largest shareholder in LSE with a 20% stake, and after the announcement, its shares gained significantly in value. Would the two stock market operators merge, Dubai would hold an 11.3% stake in the newly created exchange group. It would be the world's fourth largest market operator with more than 6,700 listed companies and would become a top trading center for mining and energy shares. A shareholder meeting will take place in the second quarter of this year to approve the deal. Tabreed announced today that it had reached an agreement with banks for its debt. The Abu Dhabi-based cooling company signed a deal with its creditors to refinance 2.6 billion dirhams in debt with state-owned fund Mubadala, which holds a 17% stake, stepping up again with financial aid. Tabreed CEO Khaled Al-Kubaisi said this marks a positive step towards the recapitalization of the company. Tabreed ran into difficulties in the aftermath of the global economic downturn as credit dried up and business volumes turned sour, plunging the company into the red in 2009. Now, in 2010, the company again made a profit of nearly 137 million dirhams. And in our fast financial news, developer Emaar Properties posted a net profit of 3 billion dirhams for 2010 and a revenue of 12.2 billion. Net profit rose 31% and revenues by 44% compared to the previous year, with Emaar's shopping malls and retail and hospitality subsidiaries being the main contributors. The largest property developer in the region handed over 3,500 units in the UAE and internationally. Middle Eastern investors have bought up a quarter of apartments in the UK's most expensive real estate project labelled One Hyde Park. That's according to a local newspaper. More than 60% of the units have been sold and up to 25% of them to Middle Eastern investors. The cheapest apartment costs only 34 million dirhams. Telecom operator Etisalat is looking to stretch its television reach to over 24 countries across the MENA region. The expansion will include Pakistan, Iraq and Iran. The satellite launch would be through Abu Dhabi satellite company Yahsat. If the negotiations are a success, Etisalat's television and video on-demand channels will be all across the Middle East, North Africa and Southwest Asia. And after the break, we find out about Harley-Davidson's new Dubai setup.